Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model daily review for the Friday the 3rd of December 2021. Time is 4:15 GMT. Asian session coming to close, European session firing up, our lunchtime North American session. Right, Thursday the 2nd then yesterday, we had a negative opposed driver in the yen at -143, front and back door flows mainly going into the pound at +132, into the dollar at +33, and the euro is the negative rock at -22, activity plus or minus 165. Intra-week then, most relevant because this is from Monday the 29th of the 11th, open to about 15 minutes ago. We've got a positive unopposed driver in the yen at +273. No backdoor flows, the opposing negative flows mainly coming out the pound at -223, out the euro at -44, and the dollar's the negative rock at -6, activity plus or minus 273. So yesterday we had a weak yen driving mainly into the pound, and over the week we've had a weak pound, but we've had the yen positively driving. So we've had sort of risk off equity flows pumping up the yen. Intraday then, this is the Asian session to about 15 minutes ago. We've got a negative opposed driver in the pound at -49, front and back door flows mainly going into the yen at +38, into the dollar at +15, and the euro is the negative rock at -4, activity plus or minus 53. So that's where we are at the moment. We'll stop it there and write up the flows. Right, we've written up the flows then. So the euro is strong except against the Swiss, the dollar and the yen, which is stronger. The yen is strong except against the Swiss. The pound is weak except against the AUD and the NZD. The Swiss is strong except against the dollar. The CAD is weak except against the NZD and the AUD. The AUD is weak except against the NZD. The NZD is weak across the board, and the dollar is strong except against the yen. So what have we got? We've got NZD weakness across the board, and we've got mixed strength in the Swiss and the dollar. And the yen. So that's, you've got sort of you've got the beginnings of sort of risk off flows. You've got yen, dollar, Swiss strength, and you've got AUD, CAD and NZD weakness. So what's been knocking about, or has knocked it about? ECB Lagarde speech today. We've got Euro retail sales, which you should obviously know about beforehand, and we've got NFP, non-farm payrolls today. We've got CAD net employment change and net rate change, and we've got US service PMI. So we've got some big tier 1 data out today, and the noise generally is in the market is that the Fed is behind the curve in terms of inflation, and therefore they need to ramp up the speed of their tapering. So that bodes towards a stronger dollar. Anyway, we'll talk about that in a minute. So we'll stop it there and write up the asset classes. Right, we've written up the asset classes then. So US dollar index, basically it's come back to 0.18 from the high. 18% off the modelled high. Gold is half marks, 0.5. Oil is pretty soft, it's 0.26 from the floor, so it's 25% above the model floor. Wall Street, S&P Tech, they've all come back. Wall Street 0.26 from the high, S&P 19% from the high, 0.19, and the Tech 0.20, 20% from the high. So S&P Tech are pretty much lockstep. Wall Street's a little bit laggy. US 10-year in the bund, this is the price then. So US 10-year 0.38 from the high in terms of price. So price is above half marks, yields are a little bit softer, and the bund has broken the resistance, and therefore the price has broken up, therefore yields have broken down. So So it looks like you're getting a divergence still in Euro and US 10-year yields, with the US 10-year outstripping the Euro yields. Copper half marks, and US steel is 0.28 from the floor, which is 28% above the model floor, so pretty soft. Right, we'll get rid of that and then just do the final analysis. Now we've obviously got, we're coming to the sort of year end. People normally talk about some sort of Santa rally and all the rest of it. Well, yeah, that may happen. We've got dollar, euro, yen, pound, CAD, AUD, NZD, Swiss. Right, well the dollar's come off a bit, and we've got NFP, etc., and we've got positive taper talk in the tube there. The bund, we got yields coming off in the eurozone, and we've got relatively soft equities here. So we're likely to get an upward thrust in the yen, but the yen's been pumped already. So oil's pretty soft as well for the CAD. At the moment, in the Asian session, we've got risk-off flows. Now, the likelihood is that we're starting to see. So this is positive, and this is negative. We're starting to see, where are we? That's sort of where we are in risk-off flows at the moment in the majors, and we've got commodity currency weakness and Swiss strength as well. So that's standard risk-off transmissions, and if you look at this, there's sort of, if you look at the bond market, and the noise is suggesting that the Fed is going to have to do something more urgently about stopping this inflation surge, and that is likely to, if they start to screw off the taper a bit quicker, increase the taper, then you're going to get a surge in the dollar, and we think the main area for on the up is likely to be the dollar, and if you get a stronger dollar, risk assets aren't particularly going to like it. So things like equities and what have you, gold certainly won't like it, and so we think you want to be looking at long USD going forward, and if equities come off, the yen will come up. So the big losers in the majors are going to be the euro and the pound. So that's where, and you want to be short pound and euro. Not necessarily as an FX pair, but anyway, that's what we think is going to happen. But generally, we're going to be looking to be on the long side of the dollar going forward for the next week or so. So that's where we are. So I hope you found that useful. See you tomorrow for the weekly review. Thank you for watching, and goodbye.